Hey everyone, and welcome back to the channel where we demystify the markets and dive deep into intriguing setups. Today, we're putting a spotlight on a fascinating hard-to-borrow stock that's been lighting up our screeners, CCTG International Holdings Limited, trading under the ticker CCTG. We're going to break down why this industrial sector company has such an incredibly high cost to borrow, what that means for short sellers, and whether it's exhibiting the characteristics of a potential short squeeze candidate. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/stock chart. Let's start with CCTG or CCSC Technology International Holdings Limited. This company operates in the industrial sector, specifically within electrical equipment and parts, and currently boasts a market cap of approximately $4.4 million. CCTG, through its subsidiaries, is involved in designing, manufacturing, and selling interconnect products across Europe, Asia, the Americas, and internationally. These are essential components, often original equipment manufacturer or OEM, and original design manufacturer or ODM product. Now let's talk about its recent performance. CCTG has seen some explosive price action recently. Today alone, this stock is up an incredible 23.8%. Looking back, it's gained 40.18% over the last 5 days and a staggering 103.27% in the last 30 days. Chart highlighting price increases. This kind of momentum always catches our eye. In terms of volume, today's trading volume stands at 4,116,800 shares, which is actually below its 30-day average volume of 10,964,180 shares. This gives it a relative volume of 0.4 times the average, indicating that while the price is moving, the sheer number of shares changing hands today is less than typical. What's cost to borrow and why it matters? So, what exactly is cost to borrow or CTB, and why is it so crucial in our analysis? Imagine you want to bet against a stock, believing its price will fall. You'd short it, meaning you borrow shares, sell them, and hope to buy them back later at a low price to return to the lender, profiting from the difference. But borrowing shares isn't free. You pay a daily fee, much like renting a car. This fee is the cost to borrow. When a stock is hard to borrow, it means there's either very high demand from short sellers, or the supply of available shares to lend out is extremely scarce, or both. This drives the cost to borrow fee through the roof. And yes, these fees can absolutely exceed 100% on an annualized basis. It's an annual rate, compounded daily, meaning if a stock is in incredibly high demand to short, or the supply is nearly non-existent, the daily borrowing rate can become very, very expensive, leading to those eye-popping annualized percentages we sometimes see. Why this stock is hard to borrow right now? Show CTB number prominently. This brings us directly to CCTG. Our screeners flagged CCTG due to its absolutely astonishing cost to borrow fee, a jaw-dropping 676.3% annualized. This is an exceptionally high number and it tells us something critical. Maintaining a short position in CCTG right now is incredibly expensive. We're also looking at an estimated float of only 3.0 million shares. A small float means fewer shares are generally available for trading and borrowing, making the stock more susceptible to significant price swings if borrowed demand or covering pressure rises. As for shares currently available to borrow, our data indicates this number is unknown, which often implies that there are very few, if any, shares readily available for new short sellers to open positions. Our internal composite squeeze score for CCTG sits at 45.0 out of 100. While not the highest score we track, it indicates conditions are certainly worth monitoring due to the extreme CTB. It's important to remember, though, that a high cost to borrow doesn't guarantee a squeeze. It can also signify that short sellers have very strong conviction and are willing to pay these high fees to maintain their bearish bet. Squeeze mechanics explained. So, how does a short squeeze actually work, especially in a situation like CCTG's? A short squeeze happens where a stock's price rapidly increases, forcing short sellers who bet against it to buy back shares to limit their losses. This buying pressure then pushes the price even higher, trapping more short sellers in a vicious cycle. For CCTG, short sellers borrowed and sold shares, betting its price would fall. But with the stock up over 100% in the last month and today's 23% jump, their losses are mounting. Add to that the outrageous 676.3% annualized cost to borrow, and they're paying a massive daily fee just to keep their losing position open. When the supply of borrowable shares is also critically low, or unknown as it is for CCTG, new shorts can't enter, and existing shorts have few options. If CCTG's price continues its upward trajectory, and those borrowing fees keep piling up, short sellers might be forced to cover their positions by buying back CCTG shares. This mandatory buying creates a surge in demand, driving the stock price even higher, which in turn squeezes more short sellers, creating a potent upward feedback loop. Dilution risk check. One crucial factor we always scrutinize for potential short squeeze plays is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding. This can dilute the value of existing shares and, critically for a short squeeze, can also provide an additional supply of shares for short sellers to borrow, effectively neutralizing the hard-to-borrow situation. For CCTG, we've conducted our dilution risk check and found no recent dilutive SEC filings, such as SMINUS-1, SMINUS-3, or 424B, in the last 90 days. This is a positive sign, as it means there isn't an immediate threat of new shares flooding the market to offset any potential squeeze. Furthermore, we also checked for reverse splits, which can sometimes be a precursor to future dilution or a move to meet exchange requirements. Our analysis found no recent reverse split for CCTG in the look-back window. This clean slate on the dilution front is an important piece of the puzzle for any short squeeze thesis. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should we be watching for with CCTG? Keep a close eye on that cost to borrow fee. A sustained increase or even stability at this extreme level indicates continued pressure on short sellers. We'll also want to monitor any updates on the shares available to borrow. If the number remains unknown or drops even further, it strengthens the hard-to-borrow thesis. Of course, price momentum is key. CCTG's recent gains of 23% today, 40% in 5 days, and 103% in 30 days are significant. Show candlestick chart look for continued upward price action, especially if it's accompanied by an uptick in volume. While today's volume is below average, the surge above a 30-day average and strong up days could signal increased buying pressure from both new buyers and short covering. Remember, a high cost to borrow is a powerful signal, but it's not a guarantee of a squeeze. In summary, CCSC Technology International Holdings Limited, or CCTG, presents a compelling case study for a hard-to-borrow situation. With an outstanding 676.3% annualized cost to borrow fee, a small estimated float of 3.0 million shares, recent triple-digit percentage price appreciation, and no recent dilution risk, CCTG certainly merits attention for those interested in short squeeze dynamics. It's a powerful example of how market mechanics can put immense pressure on short sellers. If you found this breakdown of CCTG helpful, hit that like button, subscribe for more in-depth stock analyses, and let us know your questions or thoughts on CCTG in the comments below. We love hearing from you.